Welcome back. Today we are doing another magic formula video. I know it's been a while since I've done any video. My goal for 24 is to be a little more consistent, a lot more consistent, but I also don't want to do any filler videos. So if I'm doing a video, it's going to be something I'm interested in. It's probably going to be either a concept I'm trying to work out for myself or stock screenings or individual deep dives. So this is one of those screening videos, right? So last time what I did is I took the magic formula list, I went through all 30 stocks. It was a two-part video. You'll see the link to that, or you can just look at my channel. But anyway, I went through those, kind of did a quick screening, and kind of showed you what my thought process was the first time I looked through stocks. And now it's been about 6 months, so I want to do an update on that video, look at the stocks that left, and look at the joiners to the magic formula. So first off, I have the current list. So these are the current top 30 value stocks according to the magic formula. Now, I've said this before, I don't think the magic formula is a great blanket basket buy. I think, though, it is a great screener that you can then, look through for your own stocks. Some of my best stocks have been from here. We'll talk about at least one of them, maybe two of them, but yeah. Anyway. All right, let's get started. Okay, so to start, these are the stocks, it's 12 of them, that were on the magic formula the last video, which was about 6 months ago, a little more than 6 months ago, and they're not currently on the list anymore, which means that they've fallen out of favor with the magic formula, right? So that happens for one of two reasons. Either the stock price takes off, so they're not as cheap, or earnings and the underlying fundamentals fall off, and so they're not necessarily as undervalued, right? Okay, so what happened here? Well, look at this 6-month column here. I mean, almost all of them had significant gains, and I took the liberty of averaging them out. Remember, you don't do just a plain average. You're going to do, for 2%, you don't average 2 and 78. You average, 103 and 178 and then 50. Okay, anyway, comes out to 26%, maybe 23%, I forgot. But anyway, it comes out to something in the low 20 percentile, let's say, on a 6-month period. So if you compound that, you're talking over a 50% yearly compounded rate, right? People would love 20% a year, and this list, the magic formula levers, got over 20% in 6 months, right? Now, picking the ones that are going to climb out of the magic formula, I mean, that's the game, right? But I still think it's a great way to start, because that list that I showed you the last video had 30 stocks. This is 12 of them. Okay, so you really just had to pick the best 12, right? This one, AMR, after my video, I found out that this was one that Monish bought, and that one's actually done the best out of all of them. All right, now let's go to the magic formula joiners. All right, so this is where we're going to start the video. I have not looked at any of these stocks except Crocs, and I have a video on Crocs. But anyway, these are the ones we're going to go through in the video. We're just going to do quick high-level screening, kind of show you what I look for, and then if I really like something, you might see a deep dive video in a week or so. First one on the list, Biote Corp. The first thing that catches my eye here, they announced $20 million share repurchase authorization. So that's a little less than 10% of the market cap, maybe 8%. Let's see, 20 divided by 250, 8%. Oh, right on. Okay, so they are a pharmaceutical company that specializes in the hormone optimization space, okay? Anyway, what I really care about is the financials. I'm going to look way more into the storage side on an investment if the financials look good, right? But most of the time you want to spend, you can say no a lot quicker by looking at the financials, right? Monish Pabrai talks about screening as a race to know. You're trying to find like one thing that makes you say, I'm going to stay away from this one, okay? Anyway, I'm on the income statement here. Like I said, click Seeking Alpha link below to get your trial. You can't get it any other way. All right, operating income, 10, 7, 8, 7, 32, $33 million on a yearly basis, because this is a quarter. This is each quarter. So you have that, and then your interest expense is roughly 10-ish. Look, I'll just do it real fast. 1.5 plus 2.5 plus 2.4 plus 2.2. Okay, 8.6. So minus 32. Yeah. Anyway, $23 million operating income minus interest. So we're roughly at that 10x multiple on that. It's just, I like to check that, make sure we're not at some ridiculous multiple before I move on. Do a quick check on the balance sheet. Really, I'm looking for long-term debt. So total assets 150, and man, okay, total liabilities 200, with a lot of that as debt, right? So $150 million of assets, $100 million of long-term debt. Now, one thing that's interesting, the interest expense was like $8 million, and it's on a long-term debt of 108. So that's a interest rate roughly what, 7% or so, 7.5. Anyway, higher than a lot of people, or maybe that's about right. All right, next, I want to look at the cash flow statement. I spent a lot of time on the cash flow statement, especially the financing cash flow. It's what I've really been looking into in a lot of companies. I just feel like financing cash flow gives you a great picture of shareholder returns, because if the financing cash flow is negative, it's either paying down debt, paying dividends, or buying back shares. So I love those things. You really never know if investing cash flow is going to work out, right? So you can look at operating cash flow minus investing and free cash flow, but really I want to see what are they returning to shareholders in a way, right? Okay, anyway, cash flow from financing, I'm going to add these up. So 2.6 plus 5.1 plus 4.2 plus 4 is $16 million. So, that divided by the market cap of 250 is about a 6% yield. It's a little low for me, and that on top of it being a pharmaceutical company, probably won't look into it any further. Okay, let's look some more. Let's look at the next one, CCSI. All right, short interest 7%. I always like to look at the short interest because, in my opinion, I love shorted stocks, right? Because that's people who have to buy it in the future, right? One way or the other. The only way somebody doesn't have to buy back a shorted stock is if it goes to zero, right? Other than that, they got to buy it. Man, look at this 1 year return, minus 66%. Year to date, minus 20. Wow. What do they do? Consensus Cloud Solutions. Information delivery services with a software, eFax, corporate eFax. I don't even know what that is. It just sounds like email. Anyway, okay. Let's look at the financials. I'm going back to yearly. For these screenings, I'm going to look at yearly. I'm not the quarterly. That was a mistake for the last one. All right. I didn't even see what their market cap was. Market cap, 400 million, 430 million. All right. Operating income on a yearly basis. This is yearly, right? Annual. 150. Oof. 150 operating income, and oh, wait, that's really good. So like 4x oh no, look at this. Look at your interest payment. Holy cow, $50 million in interest. That's a third of your operating income. That's usually a red flag. It is a red flag. Let's see. Let me just look at the balance sheet real fast. So $700 million of assets, 350 of which is goodwill. Okay, so just that ain't worth anything. So $350 million of assets, let's say, and 800 million of debt. Yeah, no thank you. That's enough for that one. Okay, moving on. Trying to knock all these out so that I can fit it all in one video. Catalyst Pharmaceuticals, another pharmaceuticals stock plummet. Okay, I thought this was I thought that was a repurchase. Did that say secondary offering? Spot secondary priced at 15. Maybe we'll look at that. Anyway, $1.7 billion. It's a pharmaceutical company. Let's look at the financials. 1.7 billion. All right. Operating income negative for a while until 2019, and even then, I don't think that this operating income comes close to justifying a market cap of 1.7 billion. To be over 10x of your operating income, you need to be growing pretty significantly, in my opinion. Let's just look at their cash from financing. About 16 million. That's it. 16 million. No, maybe less than that. 15 million returned and they've been via other, so not even one of the ones I mentioned. Yeah, this one's a no as well. See, it's so easy to say no. Okay, all right, Crocs. I'm skipping them. I did a full video on them. I'm kicking myself for not buying Crocs. Okay, Crocs was... Anyway, I did a video. I said if it drops to 75, I'm probably going to pull the trigger. It dropped to 75 like the next day, and I was in a meeting at the time, and I came back and it was already like above 80, and it's been above 100 for a while. So anyway, oh no, it's 98 now. Crocs is on my watch list. It should be on your watch list, and you should watch the video that I have. Anyway, all right, Ebix. I don't even know what this is. All right. Ebix, together with its subsidiaries, provides on-demand infrastructure, software exchanges, and e-commerce services to the insurance, financial, travel. Okay, another software company. You know, a lot of the Magic Formula stocks are going to be software companies because the Magic Formula operates on low assets. Oh, look at this. It's like a brand new listing. December. Almost 20% short interest. $60 million market cap. Holy cow. Okay, I'm curious, but this one probably doesn't have enough data, huh? It does. This is strange. Anyway, let me see what the market... Oh, yeah, it was $60 million market cap. Operating income, $100 million. Okay, so what's the catch, huh? Interest, $100 million. Yeah, it's probably crazy leveraged. Let's see. Total current assets 350, total assets 1.5 billion with 800 in goodwill. Man, you see a theme here, $700 million in assets. And what is this? No long-term debt, but a lot of current debt. What? This one's confusing. Let me look at the cash flow real fast. Was it a $60 million company? Yeah, so they've been issuing debt but no, I'm sorry. They've been issuing and repaying, so net they've been returning a lot of value from a financing standpoint. I mean, look at this. $66 million company, and they're returning $18 to $20 million a year. I mean, here they returned 60, so you got 100% return. Huh. I don't know. Maybe I'll look into it more. That one seems a little circle of competence, though. Outside my circle of competence, I should say. Anyway, Harmony, another pharmaceutical. Well, I assume just because it says biosciences. Let's see. Commercial stage pharmaceutical company focused on developing and commercializing therapies for patients with rare and other neurological diseases. Okay. Man, I'll tell you what, if you are competent in the pharmaceutical space, use the Magic Formula as your screener and pick the winners. And tell me the winners too. You know, that like that. Shoot, let me see, what was the market cap? Almost $2 billion. Another 17% shorted one. $2 billion, roughly 10x of the operating income. Let's see the cash flow. Yeah, just not seeing the... I mean, I guess they're repurchasing shares in the last, 12 months, but still, $50 million financing. Let's look at it like this too. $283 per share in free cash flow. Selling for 30, so roughly 10% of free cash flow, or not 10%, roughly 10x free cash flow, that's growing significantly. So maybe this one, if you think that it's going to grow like this, then it's an obvious buy. But who knows, right? Like I said, that's another one that's a little too complicated. All right, Jax Pacific. All right, what is this one? Bullseye. Well, let me read the profile first. Designs, produce, markets, sells, and distributes toys and related products, kids, indoor and outdoor furniture, and other consumer products worldwide. Okay. Despite nearly doubling since I upgraded the stock to strong buy, subtle brag, Jack still remains incredibly cheap. He's just trying to get more people to buy it. Okay. Anyway, this is interesting. You usually don't see Magic Formula stocks that had a huge run up that are now on the list. So, very interesting. Wow, 10 years they've gone down, but in the last 6 months, up 60%. Like I've said before, it's probably a fallacy. I don't usually like to buy stuff that's run up this much, just because I like to buy stuff where the 52-week range, it's kind of on the lower end, but, I'm always open to suggestions. Hard rules, they'll get you killed, I think, in investing. All right, $300 million market cap. Operating income, yeah, okay. With interest of, let's just say 8, so 58 minus 8, 50 million. Okay, it is still cheap. Look at this, net income is even higher than the operating income. So they're getting, what is happening? They have $58 million of operating income, but then their net income is 87. This doesn't make any sense to me. What am I missing? Oh, a big credit for the income tax. Okay, well, we're not going to count that. We're going to say 50 million. Not, yeah. And okay, let me go to the balance sheet. This one's interesting to me. $500 million in assets, almost 400 of which are current, and liabilities 300. So they have more current assets than liabilities, and most of their current assets is receivables and cash. So shoot, they have almost as much receivables and cash as they have total liabilities, so that's really good. This is strange, not strange, but I don't like that the shares are going up, right? So if I look at, this is 21, 9.6 shares, 9.9, 10.1. I don't like that. I like my stock shares going down, right? Because that means that they're buying back shares. I'm going to look on a quarterly basis real quick because I'm interested in this one. I'm going to the financing. Yeah, so paying down debt, repurchasing a little bit. Free cash flow per share. Let's see, this is 6. Let me go back to annual. Free cash flow per share, 9, 7, negative. Okay, so $9. If they make $9 a share, selling for 30, I mean, that's, you're in the 3 times PE range. Okay, this one's one to look into more. I hate that it's run up this much, but it is what it is, and I'd like to see them buying back shares and not diluting, but I might look into that one more. I will make a note. Okay, that was Jack. All right, PLTK, Playtika. Develops mobile games in the United States and internationally. I might have done this one last time. No, I think I did SciPlay. Anyway, $2.7 billion market cap. I'm going to go straight to cash flow on this one. Just feeling like mixing it up. $2.7 billion. What? What am I missing? Is this in US dollars? $2.7 billion market cap, and their financing cash flow is minus 600 million, but here they have a big plus. What's their operating cash flow? 500, 400. Okay, so this is another one that's selling at like a single digit PE. Well, it says that PE is 10, but I was looking at cash. Let's see, what about normal PE, earnings per share. Okay. Earnings per share is right at 10x. I know I'm jumping around a lot, but I'm trying to show y'all what kind of the process I go through. Okay, so 78 cents or basic earnings per share. So 7 is like 10x. Okay, but the cash flow, if you look at free cash flow per share, it's higher, right? About $1, $1 and change. Okay, this is another one maybe worth looking into. It's at least cheap, right? Oh, let me look at the balance. Well, y'all can look at the balance sheet. I want to move on. Rimini Street. This one I could be doing a video on in the future. I actually almost pulled the trigger on this one whenever if it like had dipped below 2 or something like that. I was waiting and it didn't. And of course it's up since that, close to, 330 divided by 2. It's up, 65%. So really missed the boat there. Basically, they are a SAP support company. So I used SAP at work. Not at my current job, but at my last one. And SAP is expensive. It's hard to get support for it. They're kind of a third party, but they're involved in a lot of lawsuits from the OEMs on this software that don't like them charging services. The OEMs, or should I just say OMs? The OMs don't like Rimini Street charging people to support the OM's product, right? So they'd rather sell their own expensive service staff. So anyway, there's a bunch of legal battles and stuff tied up in that, but the company's really cheap. Look, and it's growing a lot. So look, if I put the latest on the right, look at that revenue growth. It almost looks fake. It's like a perfect triangle up. Operating income has just been steadily growing. You're at, let's see, trailing 12 months, $50 million in operating income on a market cap of $300 million. This is one, like I said, almost pulled the trigger on. I got too greedy, I got greedy. I wanted to wait, and it didn't pay off. But I really like it. It's on my watch list. You should check it out. All right. SCYX. Skynexus. I'll pass on this one just for the name. That sounds like some biotechnology company develops products for the treatment of fungal infections. Ooh, somebody's prepping for the Last of Us, huh? All right. Anyway, look at this market cap: 78 million, $80 million. Okay, $80 million market cap. We'll go back to the latest on the left, and operating income this last quarter, almost $80 million in operating income. So it's a 1x. Look at this. Look at this net income. Now, look at the previous years. You're just losing money, but you just made some. So current year, you're at close to 1 PE, right? Anyway, shoot. Look into it. If you think it's going to continue, then this is, the formula for a 100 bagger, right? But anyway, we'll just leave that one alone for now. I might look into it more on my own time. Those small market cap ones, like less than $100 million market cap, these like Seeking Alpha, Yahoo Finance, I think you kind of want to rely more on the company's 10K, 10Q. Anyway. All right, Spiro Therapeutics, another pharmaceutical, clinical stage biopharmaceutical company. Once again, if you know medicine, look at the magic formula. Spiro Therapeutics say cash and cash equivalents as of December 31st were about $76 million. Look at their market cap, $80 million. Cash and cash equivalents, $70 million. What? This is why I love the magic formula. And look, it went down 7% on Friday. Okay. Let's see. Let's look at the balance sheet. Maybe they just have a ridiculously awesome balance sheet. Last report, $90 million of cash, $100 million total assets, current liabilities, total liabilities, most of which is unearned revenue, so that's not like debt or, anyway. 50. Do I see any debt? Not really. Okay, so let's just say that they have $50 million net cash if you count their unearned revenue. And they're bringing in cash of $29 million if that's to be continue. I mean, look, this is another crazy one that could be a multi-bagger if this continues. The problem is this is completely different than all these negatives. I mean, look at this, negative $95 a share in free cash flow at one point. But maybe worth another look. It's hard to find these without any sort of screening, right? Okay, Surge Pays. Another 20% shorted one, $120 million market cap. Well, what does this say? Surge Pays drops 7%. Price is $15 million equity offering. The last thing I want to do is invest in anything that's doing an equity offering. Like, that's the opposite of buying back shares, right? Anyway, I'll do a quick look. Balance sheet. $40 million of assets. $20 million. God, they have like very small balance sheet. What was the market cap? I'd pass on this one for the equity offering alone. Okay. T-Zoo. Travel Zoo, $120 million market cap. They are an internet media company that engages in the provision of travel, entertainment, and local deals from travel entertainment companies and local businesses worldwide. Okay, so specialized internet company. Up 57% in 1 year. $120 million market cap. Sorry, I'm getting burnt out. There's a lot of them in a row. Latest on the left. Uh-oh. Trend's going the wrong way, right? This is the graph I expect to see if I put the latest on the right. We're going the opposite direction. We got it in reverse. All right. Let's see. Yeah, I'm past for that reason. So it happens whenever you're at the bottom of the list. You got to outperform. People are tired of the screenings. Maybe I need to go reverse alphabetical order. All right. Look at this dividend yield. 7.5%. $1.6 billion market cap. Yeah, it's a cigarette company. Jesus, people still do that? I don't even know these names. Yeah, I'm a pass for it being, I won't invest in that. I just feel like it's on a way out, right? Unless they pivot into something like Zyn or the vapes. But even that's under attack now too. Anyway, that's all I got. I hope you enjoyed it. Thanks for putting up with me. Like I said, I'll be more consistent. You should see a couple more videos coming out, at least 2 a month. That's what I'm shooting for, 2 videos a month. Anyway, have a great day. See you next time.